Alright guys, welcome back to the video once again. I hope the last week was good for you all. So today we'll be learning about what is supply demand, what is the logic behind it, what is imbalance, what is order block, why use order block instead of AVG, why order blocks are swept and when, live example, backtesting examples. So first of all we will be learning about what is supply demand. So supply and demand can be imagined like in a market where a seller is selling and a buyer is buying. For example, a seller sells 10 apples for $1 and this will be known as your supply. Alright. After that, we have 20 people or maybe 10, you can say 10 people buying. So 10 people are buying this, so this will be demand. Demand. So in this scenario, we have a market where a seller is selling 10 apples for $1 and 10 people are buying that. Imagine instead of 10 people, there were 20. So what would happen? Increased number of demand will cause increase in price by seller. And this will cause price to go up. So this thing will happen. But imagine if this suddenly this demand drops, okay, it becomes 5, then this will cause a decrease in price and price to go down. Alright. Similarly, if supply goes up, imagine for 10 apples there are there are 30 and for buying people buying it will be 20. So then price will go down. Price decreases and then price goes down. So in this scenario we have this price going up, and in this scenario we have price going down. Now we have to understand why this happens. So in real market, this same logic applies. If the supply is more, then the price will go down, and if the demand is more than supply, then price will go up. This simple logic is also followed in the real markets. And that's the whole logic behind it. Now, more importantly, like if I elaborately describe what is the logic behind this, so it will be like this: price tries to seek equilibrium. Equilibrium means a fair price where the price is accepted by both the seller and buyer. That causes the price to either go up or down depending if the supply is strong or the demand is strong. In a market, to understand if the supply or demand is strong, we will try to find the structure. I previously already made a video on market structure, so if you have not seen that, go first see that because it will help you in this particular video to understand how to find demand or supply zones. If the market is going up, you will look for demand zones. And if the market is going down, for example, in this case, where we have a market structure shift and then a bearish break of structure, we would like to see the price come up to a supply zone from where we may sell the price to go even lower. Now, what is the imbalance? imbalance will be a very important concept in this whole thing, because that is what our supply and demand zones, or order blocks to be specific, will depend upon. So to understand imbalance, we will take the example that we all know, or maybe we all might not know. So first of all, what I follow personally is that there must be three candles. Obviously, this is the normal thing, but there is a twist. Just wait. So we need three candles, but as we know that a fair value gap or imbalance is formed when there is a gap between the wick of the two candles, right? But my particular strategy or my particular rules say that if the market, for example, in this case that I have drawn is bullish, right? So in this case, if the market is trying to go up and we want to see a fair value gap which is valid, then we would like to look for this particular wick of the middle candle. Since we are buying, so we will look at the high of the middle candle. I already explained what is anatomy of candle in another video. Go check that out. So in this particular candle, you can see there is a high. So we want this particular candle to close, third candle to close above this particular high to be to confirm that this particular fair value gap is valid. Similarly, for bearish case, we would like to see something like this. Price is going down. For bearish case, we would like to see that same thing for the lows. So it must close below this low to say that this is a bearish fair value gap, and it must close above this high to consider that this is a bullish fair value gap. Now coming to how to identify the order block. The order block is generally the rejection candle that we have before a VG. That means you can see that there is this particular FVG, right? This is the FVG. So we will like to see a rejection candle like this, which will be our order block. So if we follow this example, we will not need any color. I am not saying the color theory in which we take the black or the red candle or the green candle before a particular move. I'm not saying that is a wrong thing, but I personally use this particular method where we just look at the rejection candle and the imbalance. I do so because I like to not depend on the color, because different brokers have different colors of a particular candle. Okay, so let's get into the example first. So we have this order block, right? We have many order block in this area. First of all, you can see this is an order block because this is a rejection candle. This is our FVG. Alright, so in this particular area, we have this order block, right? This is a rejection candle, this is an imbalance. Now, when price comes down here, the price tends to go up. You can see this was the low that got actually broken, but since it contains some liquidity due to this break, as we know this is the external range liquidity, so price tapped this order block, goes up to tap this order block. Now once again we have imbalance here, and this is a rejection candle because this is smaller candle, so it reacts there once again. Similarly, we have one more area. For example, this is one more area of order block. We can see that the price taps that zone and then goes up. Okay, similarly it keeps going on and on, one after another. Now coming to that color theory thing. So in color theory, we take the candle that for example, if the market is bearish, we'd like to say green candle before the impulsive move, and for buying, it will be a black candle before an impulsive move to the upside. But I don't like color because it can be different for different broker. For example, this is Onda. if you check some other broker, it might be some other color. Okay, different area has different colors and different like wicks and stuff. Okay, so not everything will be uh, like under your control, so of course you have to watch for that. That's why like personally use just the imbalance rejection because it doesn't need any kind of color. All right, so there goes that. And now we have why use order block instead of a VG. Now, using of order block instead of a VG is a very important topic because see, if you use a VG, let me go to a lower time frame like this. Yeah, so imagine in this case you have two FVGs or even one, you can say. So as per our definition, this is the VG, but there is a problem. We can see this FVG is like this, so your SL must be below this level, right? Or your SL will be at this point, this below this level, and your target will be the highs. But this causes your RR to get small. Moreover, price can obviously come and sweep these areas. So there are chances that you might fail this setup. So what do? We wait for this to tap our order block, fill that gap, and then we take an entry. This will make your entries more refined and more better concise with this particular areas. Even if you like take some other example, for example, over here, we got this FVG. Now FVG gets tapped, it goes up, but it comes back down once again. And one more thing, this FVG is quite large. If you see, it is like this. So we place it over here. Our stop loss can be placed here, and our target at least must be 2 RR, right? Or even if it is 1 RR, it will be like this. So you hit the target, but the issue is when it comes down, you can see this will be a more precise and more like profitable entry by taking it like this. You can further refine the entries by making them going to 5 minute, okay, and taking the particular trade on rejection or market structure shift, depending upon your strategy. So there are multiple ways you can use order blocks and FVGs. Just backtest it and see what works for you. For me personally, I use order blocks because they give me a better RR. Okay, so I have already given live examples over here because this is the recent market. So let's start by backtesting. We're checking the daily chart first. So we have this breakout structure. So we are pretty much bullish. Breakout structure. We have this trend line liquidity. Okay. And we have this order block. Right now we're trading into a order block of lower time frame, or you can see daily order block of bearish nature. Now we'll wait for this to get tapped, or we might like to see it here. We'll not take any trade if it doesn't satisfy our rules. Nice. We have a sweep. So now what we can expect is like it sells to this particular low. we'll move to lower time frame. You can wait for a market structure shift over here, confirm your trade. So it has broken. We'll wait for this gap to be filled and take our entry around this area. So price doesn't tap our entry, but we will still like to take it over here because this has an opening gap which is generally considered to be filled. And if it doesn't fill, we generally miss the trade, but we still have chances to take it in future. So next we'll go to 1 hour. Once again, since this is still remaining, we will like to see it to keep selling for the time. Our next possible entry will be over here. Once our area gets tapped, we will again move to 5 minute. We'll look for a market structure shift. Hmm. So let's wait for this break. Right now this is consolidating, so you might take on this wave above. Alright, so it is gaining momentum. Now we can take a trade over here. It has broken this particular low, so we can consider this an internal breakout structure on which we can take a trade. Your target can be this particular low area. This will be that high, or you can keep it even further, whatever you like. So let it play out. Alright, so it has hit the TV. Now where can be our next entry? As we can see, there is some gap left here, so we will expect this to be filled soon. Let us go to daily. Okay, so we can see the daily is still pretty much bearish and this low has to be taken out, so we'll again go to 1 hour, and then we can look for two areas. There are two areas, so first area will be here. This will be lower probability, so I recommend like entering with only 0.5% risk here. And then over here we have one more entry. This will be more higher probability considering how it is doing. And for this one can be liquidity as well, so we might enter after the liquidity has been taken out. Overall, that's all. So let's wait. Price is breaking below, so we'll still wait for price to come up. 4 hours. So price is pretty much doing this, so we'll wait still until it comes here or here. But from my personal experience, if it comes up like around this particular area, it will be a better entry because like this is in obviously in premium, so yeah, like that will be pretty much a better entry for us. So before like we take any kind of entries here. Let's just look at daily to confirm how it is going. All right, let us remove this. Let us remove everything actually, because this is pretty much. So this is a takeout of a low. So we can expect the price is like likely to go up at least. Right now, to be honest, let's see how it goes. First of all, 1 hour once again. In 1 hour, we have um, is there anything good over here? So this will be our order block. One more will be over there. These two are order blocks. One more over here. So three order blocks. We'll wait for reaction because there are multiple areas of interest now. Just take this one. Yep. Okay, first area has been tabbed. So there is one liquidity here, mind it. It will be like very important thing to consider. Okay, let's see how it goes. Okay, I would let's see. Okay, okay, comes down further. Okay, there we go. So this area was actually good. So what did we miss here? Okay, so there was this consolidation and then this manipulation. Then market structure shift. So your more precise entry will be here, but this will be again 0.5% because it is like very much in the lower areas. All right. To be honest, you can take a second entry here if you want, but I would not recommend that once again. Okay, so we have one more order block over here. Okay, so how far we are down now? We are pretty much down now. Okay, let's see. 1 hour. Let's go. Okay, so we might have a 15-minute shift to be honest over here. This might be 15-minute shift to the upside. Let's see. Reload. Okay, that is good. Now this should be fine. Yep. Okay, so we have a 15-minute shift. You can take a entry, like buy entry to be honest, around this area. Okay. On the daily candle, if we see, so it's like this is the last place from where we fell pretty much. So the thing will be like this. We have this order block. Let's see it comes here. If it comes here, we can take a buy because this is a 15-minute order block that is pretty much like good enough for a trade. Okay, as we can see, it has broken above heavily. Now we'd like to see some buys. Okay, so the entries will be like this. This will be the first entry we have, and then obviously there is a 15-minute order block here. Like this would be a safer entry considering how much liquidity is pending. This can be a superb entry, honestly speaking. Let's wait for price to come down. Okay, I want it to come down a bit further. Further, please. Yeah, this step. This is good. Okay, very well. So you can take a trade here. Stop loss. You can keep like two things. you can keep it like this, or like I recommend taking at 50% of this area. That is also good. But let's see, will we likely take it here with that area. Stop loss below this level. This will be like that. And target, obviously this will be the first target and this will be the second target. So let's see. Okay. If it breaks above, we can take a second entry. Okay, it is breaking above indeed. Okay, very interesting. So this will be a second entry. Might be risky, but yeah, still worth it. So let's take the entry to again same this height. Now let's go to 1 hour and let's play this out. Alright, great. Keep going. Okay, now that is good. Now technically this is a good area to actually book the profits because it's already extended. Okay, both of them actually hit the TP. But I would say like this position might get taken out depending on the spreads of your prop firm or the broker. Okay, so we have sell increase once again since this was a liquidity. This was a liquidity. This area was liquidity as well. This is the latest liquidity by the way. So let's see if it comes up there. Okay, it did. Do we have any imbalances left on the daily time frame? Not really. Let's see. Okay, this impulse is crazy, so we might want to wait a bit more. Okay, then this one, yeah, all right. Order blocks are being broken, so this is a failure of supply areas. This might be, maybe we can see like this. Yeah, okay, now I would like to see it sell. Like this is the maximum I would like to see it go. And yeah, okay, so you can take an entry here because this should have made a shift on the lower time frames. Yeah, all right, so 1 hour. Okay, let's go to 4 hours. It is very slow right now over there. All right, right now you can take like no, you cannot take the second trade. It is not valid. All right, that's all. So this is how it works. You just have to interpret the charts, look for liquidity like this, and retest liquidity I already explained in my other video, but I'm still explaining. It is like retest of a support or resistance. Okay, now the question comes, why this fell from exactly this area? Well, that is a very good question. Well, see this is the swing high and this is the swing low, so technically we're still bearish on the 4 hours considering how it has been going. Now, this particular area had this like internal liquidity that was needed to be swept by price, and once that happened, it sold, and it sold pretty heavily. So that's all how it works. Yeah, pretty much that's it. So that's all like in this order block video. See you next time in another video, maybe in the next market analysis. Have a good day.